Welcome back, Kanekis. I hope you're all doing well. I am joined today once again by a very special guest, Rick Rule. We've had him a few times on the channel. I believe this is our fourth interview now, Rick. So you're becoming a familiar face. But to those who aren't familiar, Rick is a renowned investor in the commodity space, the natural resource sector. He is a CEO of his own media, Rule Investment Media, and he's the former CEO of Sprott Investments. So we're gonna get a lot of insight from him today, so I hope you're looking forward to it. Rick, thank you very much for joining us today.
Thank you for having me back, sir. I hope this interview serves its purpose for your audience.
I'm sure it will. I'm sure it will. So, Rick, last week we got a very interesting economic figure, the PPI, the wholesale price index, and we found out that the year-over-year increase in wholesale prices is 5%. Now, to us, it doesn't come as a surprise, right? We already knew inflation is a policy, but people are, attributing that to the oil prices, the conflict going on in the Middle East. How much of this is down to the oil prices, the supply issue in the Middle East, and how much of it is down to what we know as the true inflation, which is increase in the money supply?
Well, I think in the very near term, likely a substantial bit of the increase is due to the Gulf conflict. Higher energy prices are a form of tax. And Kojo, you know what I think about taxes.
Speak your mind, Rick. Tell us.
I
Tell us.
also believe I also believe that the conflict exacerbated a circumstance that has been in place for a very long time. It's arguable, Kojo,
Mhm.
that where you live in England, where I live in the United States, that we can ameliorate, if that's the right phrase. We can deal with our own situation. We can't necessarily deal with a war, although perhaps in the United States we could have by deciding not to fight one. That's a different question. In other words, I think they're different circumstances. I also would encourage your audience to look at these government created statistics with a bit of skepticism. The idea that the government's performance with regards to the maintenance of the economy is judged by a statistical apparatus made for me by the government is not something that gives me great comfort. And at this point in the conversation, which is to say at the very beginning, I would encourage your audience to informally index their own purchases. Take the period 2020 to 2026
Mhm.
and tell me if they own a home, what's happened to their mortgage payments? If they're renting, what's happened to rent? I would ask them to consider what has happened to the price of a shopping cart full of groceries in the period 2020 until today. I would ask them to judge both the cost and the quality of the health care that they
Mhm.
receive. And then I would like them to compare that number with the number the government gave them about the rate of inflation. And I would suggest that the gap between those two numbers would probably be surprising to some people. I note
Certainly not
too,
to
well, the
us.
producer price index is better, but in my country, the consumer price index, the CPI, well, first of all, when it's inconvenient, it doesn't include food or fuel.
Yeah.
Kojo, you've seen me eat. Any index which doesn't include lunch is of no interest to me. And beyond that, it doesn't include the cost of tax. If I didn't have to pay the tax, I wouldn't complain quite so much about the index. But the truth is that relying on these government indexes, uh, in terms of your uh, belief in your financial future, I think is very dangerous.
Yeah. It's a bit like a college student marking his own homework.
Yeah.
And we've also seen the impact this has had on the Treasury yields. The 30 year is now above 5%. The 10-year is above 4.6. It hit a high of 4.6 overnight. Is this investors seemingly giving the government a vote of no confidence, saying we don't trust your numbers, we don't trust your bonds, so we're going to sell it?
I think so. Yeah, I think so. Not just in our case, domestic investors, but rather foreign central banks and foreign investors. The foreign central banks saying, so let me see, if we disagree with you, you steal our assets,
Hmm.
as we did to the Russians. I'm not suggesting that people should be friendly with the Russians necessarily, but stealing their assets is not a way to engender sympathy. But Kojo, well, you and I talked about this. The U.S. long-term debt is just a bad deal.
Yeah.
Uh, if you believe, as I believe, that the deterioration of the purchasing power of the U.S. dollar is marching along at 8 or 10%, even a 5% yield is insufficient. You aren't making five; you're losing five. And I think the market is starting to vote. The U.S. government, clearly the president,
Hmm.
uh, have done everything they could to lower near-term interest rates, but it would appear that the market is reasserting control over the long-term interest rate.
As they should. I mean, yeah, okay, so this is a good place to introduce it. I believe it was on Friday. I posted something on X about controlling interest rates being a form of price controls on borrowing. And you mentioned there that they've done everything they could to lower the short term. We've seen that they've brought in Kevin Walsh as the new Fed chair, who is supposedly a hawk, but we know the Fed doesn't have a history of doing the right thing when they need to. So how would the impact of the higher yields, how would it affect, firstly, the gold price, and secondly, private credit? Because private credit has been coming up against,
Yeah.
a wall. So those two markets, let's start with gold and then with private credit.
Uh, Higher nominal interest rates do two things. They increase the price of the U.S. dollar relative to other currencies, and gold is denominated in U.S. dollars. So, of course,
Hmm.
a
Hmm.
stronger U.S. dollar, even a temporarily stronger U.S. dollar, depresses the price of gold temporarily. The second thing is that it, separate and apart from that, increases the relative attractiveness of Treasury securities relative to gold. Note that public interest in gold is still pretty much at all-time lows. The I'm told by J.P. Morgan Chase that in the U.S. market, the market share of gold and gold-related equities, let's say precious metals denominated investment instruments, is about 1/2 of 1%, which is to say that 1/2 of 1% of total savings and investment assets in the United States are in precious metals and precious metals related securities. Uh, to the extent that you make uh, bonds more attractive with higher interest rates, given the fact that almost nobody's interested in gold anyway,
Hmm. Hmm.
it's deleterious in the very near term to the gold price. I experienced this, Kojo, likely before you were born, in the period 1968 to 1972.
Well before I was born.
We had had, we'd had 15 or 20 pretty benign years in the United States, the period 1946 to 1967, 1968. And
Hmm.
people's expectation of the future were set on their experience in the immediate past, just like today. We had 5 years of inflation in the United States, 1968 to 1972, before the compound impact of inflation inflamed the public consciousness.
Mm.
When it did, when it did, when we broke the dam, all hell broke loose. The purchasing power of the US dollar over 10 years declined by 75%. That's not, by the way, calculated by your old fat friend Rick Rule, but rather by the Office of Management and Budget. And not coincidentally, the gold price went up 25-fold.
Hmm.
Now, I'm not, by the way, suggesting, Kojo, that in the next 10 years, the gold price goes up 25-fold. I'm suggesting merely, and we can talk more about gold in a minute, that it will maintain its actual purchasing power when the US dollar again loses 75% of its purchasing power.
And to be fair, 75% annualized comes to 7.5, which is very close to what the PPI percentage came up as, which was 5%. So are we there now, or could it get worse?
Oh, I think it does get worse.
Great.
And I don't want to speak to Britain's finances because I don't live there and I can't discuss them factually.
Oh no, the PPI was for US, was for
Yes, no,
America.
I'm saying I don't want people necessarily to correlate what I say
Ah,
about the U.S. with Britain just because I'm not an expert on Britain.
sure.
But in the United States, and we've talked about this, you and I, before, we owe almost $40 trillion on balance sheet.
Yeah.
Now, the big thinkers of the world, President Obama, said that doesn't matter because we owe it to ourselves. That's wrong. The spenders owe it to the savers, right? There's no uniform ourselves. That's
Yeah.
wrong. But a
Yeah.
worse problem is that we have, by mid-range estimates, $120 trillion in unfunded obligations around entitlements, Medicare, Medicaid, Social Security, military pensions. So add those two numbers together, 40 and 120. You got 160. I'll save you the math, right? Uh, the Internal Revenue Service, for your audience, that's our tax guys, estimate that the private net worth of all Americans, they have an interest in knowing this number, is $172 trillion. So
Mm.
you take what we're worth privately, 172, with what we owe publicly, 160, there's $12 trillion left over. It's a pretty skinny equity slice, right? But that skinny equity slice gets $2.5 trillion a year smaller on balance sheet. That's the budget deficit, and $2
Mm-hmm.
trillion a year smaller off balance sheet. That's the growth in entitlements. What that means is that 3 years from now, we've used up the fiscal balance between what we have and what we owe. Now, that doesn't include the value of all the federal assets, right? But could you see me owning US treasuries and them not paying me and me going up and saying, well, I'll take title to the national parks or something like that. You got to understand as a creditor, if your debtor is nuclear armed,
Mm-hmm.
you don't have any security.
I mean, Russia found out the hard way, and it's why, the
Yeah,
BRICS countries are going more into gold. They've put sort of bullion banks in Saudi and Hong Kong, and they're trying to
right.
build more and more to decentralize it. Do you see the dollar coming more and more under threat in the years to come as this plays out?
Yeah. I mean, the question is compared to what, right?
Mm-hmm.
I mean, I see the US dollar in an absolute sense losing 75% of its purchasing power. Uh, I don't see the pound doing any better.
Nope.
I don't see the euro doing any better. Uh, and frankly, as to a BRICS currency,
Mm-hmm.
uh, my friend Doug Casey once said the U.S. dollar is a I owe you nothing, the euro is a who owes you nothing, and the BRICS would be a nobody owes anybody anything. A currency that is constructed of a basket of unconvertible currencies in opaque countries. I mean, give me a break.
Yeah.
Uh, at least the U.S. dollar is a lie told by a credible counterparty. It's
Supposedly,
Go
sorry,
ahead.
go on, go on. I was just gonna say, supposedly the plan isn't to have a currency, it's just to settle in gold. I'm not sure if that's the new plan or they
I'll
still.
believe that when I see it. Uh, I
Right.
think I think that if they do it, they'll have a gold denominated as opposed to a gold backed security because most of the BRICS countries don't have any gold.
Hmm.
So making something with a substance that you don't have any of is a bit of a challenge. At present, you know, countries are doing a pretty good job of beginning to settle outside the US dollar. But as soon as they do it, when they buy something else, they convert what they settled into US dollars. So we still have a de facto US dollar reserve system. That's going to have to change.
Yeah.
Uh, I just don't know what we replace it with. I think that some foreign central banks have come to the conclusion, not illogically, that the ultimate settlement mechanism outside the US dollar can be and should be gold. It's interesting that one of the criticisms of that point to the fact that the Turkish central bank just sold a bunch of gold. To me, that's the strength of gold. They had something to sell.
Mm-hmm.
Had they saved in US dollars in the last 5 years, as an example, they would have received, in terms of benefit, less than half of what they received from having saved their national wealth in gold. Far from the Turkish sale being uh, a fact used to condemn gold, I think it goes right straight to the efficacy of using gold because they had a better return.
Yeah.
And they had a return without exposing themselves to the policy preference of the US dollar, which could have been expressed through sanctions or, as in the case of the Russians, through theft.
And just so the audience is aware, when we talk about gold working so well for, for Turkey, the same applies on an individual level. If we hold gold and we save it for emergencies, say, we lose a job, for example, over that 5-year period, you would have done better holding gold than you had by saving in the currency in the bank.
Absolutely. And you can go back further than that, Kojo. I began systematically saving in gold. I've owned gold from time to time most of my life, but I began systematically saving in gold in the year 2000. It was one of these millennium things. I looked at everything I was doing, my whole financial life, everything, and I decided to do things differently in the year 2000. And I decided in the year 2000 that I would save in gold and that I would actually maintain a separate ledger, informal ledger in my own mind that measured my income, my net worth, my obligations, all of that in gold.
Mm-hmm.
And it's been a very interesting exercise because when I look at the price levels of things, not in US dollars, but rather in gold, I'm struck in gold terms how cheap real estate is. I'm struck by how cheap health insurance is. I'm struck by how cheap energy is. I'm struck by how cheap food is. I
Mm.
live my life in US dollars. So when I look at these price levels in US dollars, I'm struck by how expensive they are. And when I run the same ledger in gold, remember that gold in 2000 was 253 US dollars. When I run that same ledger in grams of gold, I'm amazed at how cheap stuff is. It's a very useful consciousness exercise.
Yeah. And I mean, it's amazing to me that even economists who would go all the way to PhD level do not know the usefulness of gold. It's remarkable. It's remarkable.
My, my stepfather had a PhD in
Mhm.
biology, and he said that PhD was an acronym for piled higher and deeper.
So there's the private
Yeah,
credit aspect of it. How does the high bond yields affect private credit? Because they're struggling.
yeah.
We already know there are cracks forming. So does this make it worse for them?
I think the seeds were sown for a crack in private credit before the interest rate went up, which is to say, the high yields that existed in private credit from the mid 80s until 2012, 2013 attracted a bunch of practitioners in private credit who weren't private credit guys. They were just
Mm.
attracted because the track record allowed them to raise money easily. And we've had very poor underwriting in private credit for at least
Yeah.
15 years. I myself was priced out of the natural resources private credit market because a bunch of tourists came in, didn't understand the risks that they were running, and underwrote those risks at interest rates that, for me, didn't compensate me for the risk I was taking. So even before the interest rates rose, the structure of private credit began to deteriorate because the underwriting standards got worse and worse and worse.
Hmm.
Rising interest rates, first exposed the stupid credits that people were writing. But the private credit guys were also they were committing the cardinal sin of banking, which is to say they were lending long at fixed rates and borrowing short at variable rates. And so
Mm,
as interest rates rose, their cost of capital went higher. Their return on capital employed stayed the same, and their access to additional credit and the value of the dividends or distributions that they paid fell. That's what brought down the U.S. savings and loan industry.
right.
It's what brought down Barings. It's what brought down Silicon Valley Bank. This idea that you utilize short-term floating rate money to fund long-term fixed rate money, that's
So,
brought down more banks than anything else in history.
yeah.
The increased interest rate also limits the ability of the borrower to finance out. A business that worked okay at 7 doesn't work so well at 10, and that money becomes less available. I suspect that the cracks you're seeing now expand. Let's just be polite. I
Yeah.
think they expand. I think that the tourists that you saw in the private credit market,
Hmm.
these tourists manage trillions of dollars, are going to have an ugly lesson, as are their investors. What, as long as we're being gloomy, Kojo, uh, and we can get more positive later. It's more fun.
Sure, sure.
But what really scares me isn't just the private credit market, but if you extend that to all of the corporate subprime, which is to say high yield or junk credit, what scares me the most in the US are these high yield exchange traded funds. They've attracted lots of ma and pa investors who are after enhanced yields. We inelegantly call them yield whores, people who want higher interest payments but don't understand anything about the risks they're taking. And the structural problem is that these ETFs are hugely liquid. They trade billions and billions and billions of dollars a day, and they have trillions of dollars of assets. But those assets are illiquid.
Yeah.
If the Ma's and Pa's in the US begin to be concerned about credit, as they did in 2008, as they go to sell those ETFs, the managers must sell the underlying assets to fund the redemptions. While the top structure is hugely liquid, the assets are hugely illiquid. And if all of the managers are going simultaneously to sell assets that have no bid, the prices collapse. When I was first in the junk bond market in the 1980s, we had a saying about an illiquid bond. Pardon me, owl bonds. That referred to the fact that if you wanted to sell and you called your broker, say, sell this bond, he would say, to-hoo, to-hoo. And I have a nervousness. I'm not saying that this is going to occur, but I have a nervousness about what might happen if the concerns about private credit extend into non-investment grade credit as a whole. And this stimulates the Ma's and Pa's who own these bonds, who own these ETFs, pardon me, to sell them.
Hmm.
I don't know what it would look like, and I hope I don't find out.
And I mean, it's so pervasive, the number of sectors that use private credit, especially the AI sector, which is now propping up the stock market. And we know that many, well, I don't know if this term is derogatory, but we know that many boomers are about to retire, and
Yeah.
their net worth is tied into their 401ks and pension funds. So if this private credit market blows up, like it looks very certain to, and they all retire at once, that's even more liquidity being drawn out of these funds. So everyone's racing for the exit. How does it look?
Kojo, even if they don't, even if private credit doesn't blow up, the fact that the boomers are now going to need to dishoard investments to live, separate and apart from what happens with data centers or other forms of private credit. Uh, the boom that the economy experienced in the last 45 years was a function of boomers earning and saving.
Mm.
Demographically, with the possible exception of me, who can't stop working, that party's over.
Yep.
It's just flat over. And, for a whole bunch of reasons, and we can talk about this sometime, the period that we inhabited, 1982 to 2022, was probably the most benign investing climate in human history. And it's done.
Yep. Yep.
People's experience was predicated by this benign time. And we're coming into a period that doesn't need to be catastrophic, but it's going to be less easy no matter what.
And I mean, that was when this whole period of, oh, just 60-40 portfolio, put it away, no longer have to think about it, came about. There was also a period of general peace, relative peace in the world, and you didn't have to factor in the Strait of Hormuz being closed. But now you do. And it's getting very tricky to find places to invest and park one's money, which brings me to the next topic about buying hate and selling love. Which I honestly love that quote from you. Honestly, Rick, you have to make that into a merchandise. You have to put that into a shirt or something, because it will fly off the shelves. But yeah, buy hate, sell love. What are you looking at the moment in the market that is telling you this is a buy because people
Well,
are paying more
sadly,
trying to sell it?
outside politics, sadly, there's not enough hate to go around. When you and I first met each other some years ago, there was plenty of hate out there to buy.
Yeah.
The last broad asset class and resources that was hated was oil and gas. And now, perversely, as a consequence of international hatred, there's a lot of love for oil and gas. The only things that are hated anymore that I know of are places. Uh, if I were able, as an American, I'm not.
Hmm.
And as
Hmm.
you know, I have a bank, so I'm regulated by Americans. If I wasn't laboring under that, I would be looking right now to invest in Russia, which is hated, and Iran, which is
Hmm.
despised. But there are still various places in the world that are hated. And I'm not trying to say that they're not politically risky. They are. But we believe that other places in the world aren't politically risky.
Hmm.
We believe Great Britain isn't politically risky. It is.
Oh yeah.
The Germans have proven to us that Germany is politically risky. But the world safe haven, the United States, is, I think, extremely risky. I'm not trying to say that the United States is more risky than Congo. I'm not saying that. What I'm saying is that Congo is priced to reflect the risk, and the US isn't. So I'm, particularly as a speculator,
Hmm.
uh, uh, creating a shopping list of assets in countries that are hated. I'm not acting on that yet because I think there's a possibility of a pretty good crisis coming up of some kind. And irrespective of how cheap things are now, they can still fall by half. And in my life, what happens in a crisis is that assets that are hated, even if they're cheap, fall by more than assets that are loved.
True.
So it wouldn't surprise me, as an example, to see various West African nations' bonds, uh, and these aren't overly indebted countries because most people in the world are not stupid enough to lend to them, so they're not overly indebted. It wouldn't
Hmm.
surprise me to see a collection of West African short-term bonds fall in price by 75%. Uh, if that happened, mining assets in those countries might fall by more. I'm not saying it's
Yeah.
going to happen, but if I look around the world for where the hate is only in places. It doesn't exist too much in commodities anymore.
I agree.
And as you suggest, I'm a student of hate, at least economic hate.
So, okay. So I was thinking, okay, what are the other sectors that people aren't paying attention to? At least if they don't hate it, it's probably because they aren't aware of it. And I was thinking of the whole concepts about pick and shovels. So you buy the people who create the things
Yeah.
that sectors use. And I was looking at the oil refinery, the oil manufacturers, and I saw quite a few, well, two stocks that stood out to me. I'm not sure if you're familiar with them, but the first is OMS Energy Technologies. They were recently listed on the Nasdaq. And the other is NCS Multistage. So they are companies that manufacture oil wellheads. And the latter, NCS, they're selling for less than net asset value. So I was just wondering, could that be where people should look at the manufacturers?
I think it's a great thesis. I'll tell you my personal problem with it.
Okay.
My my personal track record for securities analysis and oil field services, going back 45 years,
Hmm.
is adequate at best. I was
Okay.
tempted, unblemished by success, but I'm. Uh, there are a lot of people who I know who know more about that than I do, and I'm at a disadvantage. So what I've done personally is I own Schlumberger, I own Halliburton, and I own Rig. Uh,
Okay.
the three industry leaders in their respective parts of oil field services. Not that they're going to grow the fastest, not that they have the best technology necessarily, although I think Schlumberger does,
Hmm.
uh, simply because their research and development budgets are larger than most of their competitors' sales.
Wow.
And
Okay.
I believe that on a global basis, we're going to have to spend 6 or 7 years making up for deferred sustaining capital investments, and that those oil field services companies will likely be beneficiaries of that. I'm
Yeah.
able myself to be more um, aggressive, add more value by research in exploration and production because I know those industries.
Hmm.
I don't have the same advantage personally in process and technology that I do in upstream resources. So I don't allow myself to be as speculative around improvements in technology. The problem isn't the
Mm.
industry, the problem is me.
Yeah, that's fair. That's fair. I mean, for me, it's so my background, you're aware, is in aerospace engineering, and some of them are using some lessons from, structural engineering. So I'm like, oh, okay, that's interesting. Let me try and dabble in that. Um,
I think you're also of the right age. You know, when I came into the business, there was so much money to be made upstream in the decade of the 70s, and uh, not my immediate family, but my distant family had background in upstream oil and gas. So I had access to expertise. It's also what I studied in university. So that
okay.
by the time I got around to trying and understanding process and technology, I had less mind share available. Uh, and frankly, I was
Right.
spoiled. You know,
That's
But
fair.
somebody with your educational background and your youth relative to mine, probably, if it's fun for you,
It
which
is.
means if you do it, you're competing with people who aren't doing it because it amuses them.
Mm,
If it amuses you, you're going to outcompete them. They're
true.
going to work for 8 hours in order to get what they're really after, which is something that money can buy. You're going to work for 8 hours, and then you're going to be thinking about it for the next four because you enjoy it. And that 4 extra hours that you employ every day in the pursuit of
Hmm.
knowledge, that 4 extra hours is cumulative and compounding. They might be able to catch you in a year, but after 5 years, they're screwed.
Honestly, Rick, that is phenomenal advice, and I don't think we should limit that to just, the pick and shovel plays. Like that can apply to anything that anyone wants to go into if they love what
Agreed.
they're doing more than the professionals. I don't see why
When
they
I
can't
think
succeed.
when I think back to the decade of the 70s in
Hmm.
resources, I was competing with a lot of greedy young men who wanted to buy a Lamborghini. They were thinking about the Lamborghini.
Yeah.
I didn't care about the Lamborghini. I was absolutely passionate about what I was doing. And I didn't beat these guys. I kicked their asses. My only interest in a Lamborghini really was maybe buying a Lamborghini dealership and selling them an overpriced car, right?
Uh,
These guys couldn't compete with me. They devoted themselves to something for 8 hours or 10 hours. They resented it and they were
mm,
doing it to do something else. I was doing it because intellectually I had no choice. I loved it. And
mm.
these guys, many of whom were smarter than me, many, uh, I buried them.
Always the humble gentleman, Rick. Always. There's something I wanted to touch on because when we met in London, we talked a bit about the mining industry in Ghana, and we talked about Galamsey for a bit. And I wanted to do it on this, like during this interview, because I looked further into it, and it's actually what I describe as a vicious cycle because the higher gold price incentivizes more illegal mining. And I was wondering, how do people in Ghana counteract this? Because we can't rely on the government to fix it. They're part of the problem. They're part of the reasons why Galamsey became a thing. So, what could the locals do?
Well, maybe become Galamsey. Um,
Right?
you know, uh, Ghana's a special case. Ghana's been very good to me. And I don't know if you know this, but one of my early mentors in mining was Sam Jonah.
Okay.
A Ghanaian, I don't mean a white Ghanaian, I mean a Ghanaian. Uh, a spectacular, spectacular human being. He and I differed in political viewpoints because he aspired to power, right? But
Right.
he was a unique, unique human being, and so I've had a fondness for Ghana. It's made me a lot of money. Um, well, you know this. It's also a friendly place. You go to Ghana, and people smile at you, which is very nice. There's
It
other
is.
places in
Yeah.
the world I go to where people don't smile. Unfortunately, Ghana has a political class that would be very much at home in the U.S. Among the U.S. political class. I mean,
Yeah.
the skill that they have employed to ruin Ghana is amazing. The advantage that Ghana had, as an example, in cocoa.
Hmm.
Uh, how is it that you are the lowest cost producer in the world and lose money? That takes skill.
It does.
And then the incredible fiscal stimulus that Ghana got from the gold industry, and it's gone. This is a small, by global standards, not by African standards, but by global standards, poor country. But it's a country by West African standards that has high education levels.
Hmm.
Uh, there is a Ghanaian diaspora, yourself as an example,
Yeah, I was gonna say.
young people who have contributed around the world
Mhm.
who have been discouraged from coming home and contributing at home. Like,
Yeah.
where's that at? And now there's a billion barrels of proved developed producing oil in Ghana, and the fiscal situation gets worse.
Hmm.
This figures the mine. Um, Ghanaians, like Americans, uh, tend to vote for people who play to their emotions. They tend to vote for free beer and a free lunch. And of
Hmm.
course, there's nothing free. All I could suggest is that individual Ghanaians play to their individual strength, and pay less attention to collectivism. I would hope, I know it's probably dangerous to do this in Ghana,
Hmm.
but I would hope that Ghanaians asked of their government, um, when will cocoa farmers be allowed not to pay marketing support when we're the lowest cost producer in the world? When will a government which enjoys a monopoly on the mid part of cocoa distribution enforced by a gun not lose money on
Yeah.
this monopoly? What happened to 35 years of gold revenue? Where is it? Why, as an emerging oil producer, uh, do we have persistent and growing budget deficits? And why, just out of curiosity, haven't we been able to do what the notoriously corrupt Nigerians have done and build an oil refinery? I mean, that's a different story. The fact that they built a big refinery and Dangote couldn't get
Dangote.
enough domestic crude, I guess because the domestic elites were making so much money bunkering, selling crude above. I mean,
Hmm.
the idea that an oil exporter like Nigeria couldn't support a domestic refinery with crude.
It boggles
I
the
mean,
mind.
yeah, I mean, that actually makes an American proud of America, which is tough to do.
I mean, what you said there, particularly relating to the diaspora, because myself, I can speak personally. I would really love to return to a Ghana where I know there's so much growth potential. Everything is in the favor there. We just need to get the politicians out of the way.
You hear that Africa lacks human resources.
Uh-huh.
You go to Houston, and the big oil company full of Africans.
Wow.
You
Okay.
you, you go to Denver, and the mining industry is full of Africans. Now, part of that is white folks' fault, right? I mean, I remember Mark Bristow, Barrick, very successful in West Africa. And he said, the economic activities in a place like Liberia or Sierra Leone are so lousy that you have access to the top 1/10 of 1% of the citizenry. And they want to live there. They want to work in Sierra Leone. You get a white guy, he's likely not as good. Uh, and if he's from Denver, he wants to live in Denver. He doesn't want to live in Sierra Leone. The idea that you can hire a better guy who's local who wants to be there,
Yeah.
this is common sense.
Yeah.
So, some of the fault of the mining industry in West Africa is just idiotic racism on the part of white folks. But the other thing is that, a lot of African cultures have denied uh, the people that have access to the skills that they need the type of upward mobility or the type of access that would allow them to implement their skills. I mean, I maybe 10, 12 years ago, I was at Shell in Houston.
Mhm.
And, Shell's a pretty important Nigerian operator, among other things. It isn't that they were necessarily applying Nigerian skill sets just in Nigeria. When you look through the geological and geophysical talent employed around the world by Shell, there were a lot, a lot of Africans. And they weren't there as a consequence of affirmative action. Believe me, nothing in U.S. law that says you got to hire a Nigerian, right? I mean, you may have to hire a tricolored female, but there's nothing that I'm aware of in terms of U.S. DEI that said
Yep.
that Shell had to employ on the western, uh, on the north shelf of Australia, a Nigerian. They got there because they were the best folks for the job, and that's something that the world's going to have to get around to eventually.
Yeah. I
I
mean, I
when I was still active, this will make you laugh or cry. I don't know which, but in countries like Ghana, or in my experience, particularly the Congo, uh, having a white guy in tow, that was like a huge status symbol in Africa. I'd get trotted around by these government guys. I came to understand how a very cute girl in a tight skirt felt. It was. I know it's a horrible image.
no, no. I mean, we can all be popular somewhere, So you found your place. um, I mean, I suppose that feeds in nicely to my next question. You've seen that it could like life can be better elsewhere. You get treated better elsewhere. And if things are gonna be chaotic in the West, so it's not just US, it's across the Western world, Britain, France, I mean the large part of Europe.
Yeah.
Where would you be comfortable seeing out the crisis that you foresee? Because we talked about Dubai and London, but Dubai is not looking it's not looking great right now as a place to live.
Kojo, I don't know if you've ever interviewed Doug Casey. Uh,
I would love to.
well,
Can't
I'll
find his
set that up.
contact details.
I'll set that up if you email me. Well, I can't say that Doug will do it for sure, but I'll tell him you should.
Thank
Uh,
you.
Doug Casey, he spent a lot of time thinking about this. He wrote a book years ago called The International Man.
Yeah.
By the way, the best-selling book in Rhodesia, when there was a Rhodesia, for fairly obvious reasons. At any rate, uh, he suggested to people in very off-color colloquial English that your assets, your passport, and your ass should be in three different domiciles. Um, there are countries around the world that still regard talent uh, as an asset.
Hmm.
And as a consequence of that, they welcome you. The difficulty is that they can change.
Yeah.
And by the way, I haven't deployed this. I'm still much too much US centric. So I'm uh, in a literal sense, a slave to our system. But I
Hmm.
think someone your age with your cultural fluidity probably needs to explore second citizenship, just in case you need a bolt hole. And you probably need to keep the bulk of your savings outside Great Britain and outside Ghana.
Okay.
Where you did that is a different, is a different question. My favorite right now would likely be Liechtenstein. Uh,
Okay.
the idea that the prince there says publicly that he considers his citizens to be customers rather than chattel is refreshing on a global basis.
It is.
Um,
Okay.
Despite the encroachment of the People's Republic of China, I think that Hong Kong is not a bad place temporarily to domicile savings.
Okay.
I think the United Emirates is likely a good place. Mauritius seems to be making an industry
Okay.
of allowing people access to their own money.
How does gold factor into this? By holding gold, would I almost be that international man in terms of having my assets outside of the West, or is it just because it's in these countries? It's not
I have,
necessarily.
I have, I have stored my physical gold, most of my physical gold, outside of the U.S.
Oh,
Now, I've
okay.
done compliance. In the United States, if you shift cash abroad in amounts greater than $10,000,
Hmm.
uh, file a Treasury notice. And I've always done that. When I've shipped money out of the US to buy gold, I've always informed the US Treasury. And interestingly, they ask voluntarily for the purpose of the transfer. And I've always said to buy gold outside the territorial confines of the US. I don't think they read these disclosures unless they want you. I think if they
Yeah.
want you,
Yeah.
they're going to get you anyway. But
Yeah.
I would suggest, Kojo, perhaps out of an abundance of caution, that you consider holding physical gold in a safe deposit box or in Brinks or something like that outside the country of your domicile. Most of
Okay.
my physical gold holdings aren't physical. Most of my gold holdings are in the Sprott uh, physical products, the physical gold trust, the physical silver trust, the physical uranium trust.
Hmm.
I hold them there because I'm lazy, and I can buy with the click of a mouse, and I can sell with the click of a mouse.
Yeah.
And I think, I don't know, I think that my antenna are sharp enough that if the situation on a global basis or in my own country deteriorates enough, that I'll be able to click that sell ticket
Very
and give
easily.
the money before somebody can come and deprive me of it. Perhaps I'm wrong, but I've chosen for most of my precious metals holdings to have them in the form of exchange traded deposit receipts.
Okay.
I think within 2 years, it's likely that we will have uh, a tokenized delivery receipt. The technology for that exists today.
Yep.
The legislation on a national basis does not exist today. But the first country that provides a functional, viable alternative gets the lion's share of the benefit for that.
Hmm. Hmm.
So I suspect within a couple of years that we'll have a product, a fractionalized depository receipt that will allow you to save in gold while simultaneously using it for transactions. Fractionalized. I mean, I believe within 2 years, you will be able to go to Starbucks and buy a coffee with a fractionalized piece of your gold holdings, but we're not there yet.
Have you heard of Glint? Because
Yes.
they have something like that. They use the MasterCard.
Yeah, they do. The difficulty is that Glit's balance sheet and income statement concern me a bit. Uh, I want
Mm.
I want the steward of my token to be determinedly solvent,
Are they
uh,
not?
and I want what I really want. Well, first of all, I want it to be very broad spread. Uh, I want it to be wholly reserved,
Hmm.
which say I want those fractionalized ownerships to be redeemable, and I want the aggregate sum of the tokens to be exactly equivalent to the aggregate sum of the gold in good delivery form.
Yeah.
So the standard would be high. Uh, at our bank, Battle Bank, all of the gold that we store for clients as security for our loans, or merely that we store for them, all of it is deposited at Brinks,
Hmm.
not way because we get better service at Brinks, but rather because Brinks is owned by a public company, and I can see on a quarterly basis their balance sheet and their income statement, which means that I know that your gold and my collateral is there.
Yeah.
Uh, and that's important to me. I don't want any opacity between me and my gold or me and my collateral. And that
I
would be
agree.
important for me in terms of a coin. I would
Hmm.
need uh, a very trusted intermediary. If they weren't public, they would at least have to be reporting.
Hmm.
You know, if a private party lies to me, I have recourse in civil courts. If a private party lies to the government uh, in the wrong set of circumstances, they go to jail. That's a much better reporting standard for me.
I agree. Rick, you have actually made time fly by so quickly. I can't believe we're already up at the hour. You touched on Battle Bank. Can you tell people more about it as well as the Rule Symposium that is coming up in 2 months?
Well, the Rule Symposium is time sensitive, so let's start there.
Yeah.
The symposium has existed for about 30 years. I forget exactly how many. Um, and I, in all humility, I think it's the finest natural resources investment product on the planet.
I agree.
Uh, why? Well, we have big picture thinkers who give you information in a way very unlike the way that Fox or the CBC would do. I suspect that they tell you more or less the way the world is, as opposed to the way the big thinkers wish it were. And I think that's important.
Yeah.
Uh, when we're done questioning paradigm, uh, we then bring you analysts and portfolio managers who've been active in natural resources and precious metals for 40 years. The internet's full of morons touting their track record that they've achieved over the last 12 months in a bull market.
Hmm.
That
Hmm.
doesn't work. You need somebody who can impart lessons learned over bull markets and bear markets, good markets and bad markets. Somebody who stood the test of time. In other words, old folks. So we bring you these old folks, but not the old folks that have been washed out and killed, rather the ones that have served their clients for 40 years.
Mm.
Another key difference, and no other conference that I know of does this. Every public company exhibitor at my conference, Kojo, every single one is owned in our accounts. Now, that doesn't mean, sadly, that because I own the stock, it goes up.
Yeah.
But it does mean that we've vetted every one of these exhibitors. And that's really important. We turn down more exhibitors than we admit. And I don't think anybody else does that. But the thing that we do that's the most extraordinary is whether you attend my conference live, by the way, we're sold out live,
Yeah.
Or via live stream, which is what most people do. Two things. One, you have access to the entire proceedings recorded, and you're going to need it because we're going to give you more information than you can absorb. But the second thing that we do that's most extraordinary, nobody else does this, is that it comes with an unconditional money back guarantee. If you think for any reason you didn't get your money's worth, email me. I'll give you your money back. Nobody else I know has the jam to do this. And that guarantee is your guarantee that our content, that we're confident enough that in our content that it'll make you money, that we can make this guarantee. Now, we've only had to refund about 0.1% of the tuitions we've charged over 30 years because the content is indeed that good. But there is no other conference sponsor I know of in the world that has enough confidence in their content that they will meet our unconditional money back guarantee.
Yeah. Rick, thank you very much for making the channel an affiliate. So, folks, if you'd like to sign up for it, make sure you use the link in the description below. And could you tell them about Battle Bank as well, very quickly? What's the offering there?
Yeah, I mean, Battle Bank is partly a labor of love. You talked earlier about 60-40 portfolios. I'm a credit analyst, and I look at the bond indentures that these guys on Wall Street want me to buy, and I just say, no, thanks. I'd rather make my own bonds. And that's what bank loans are. So Battle Bank is really an outgrowth of an earlier successful effort called EverBank. The group behind Battle Bank built a bank, one of the earliest internet banks, opened in 2000. They sold it in 2014, I think. They grew the bank from $0 to $28 billion by serving the customers better. Old-fashioned idea. We talked earlier about the mismatch between duration, liabilities, borrowing short-term floating rate to fund long-term fixed rate. We don't do that.
Nice.
We just don't do that. But we do a bunch of other stuff. We treat our customer well, which is a real innovation in banking. We, as an example, pay interest on your checking account. There's $3 trillion on deposit in the U.S. that doesn't earn interest. Can you imagine? That's stupid. Wow. So, yeah, we do that. We believe that the next 10 years, we're going to have a lot of currency turmoil. We don't think there's going to be any good currencies, but you have to save in something. And so we give people the ability to save in 20 currencies, not just the US dollar or the pound sterling. But choose what you want. Dirham, Singapore dollars, Yuan, all those things, particularly for first-generation American and Canadians that live their lives in two countries and two currencies. This is a hell of a function. We also believe that your retirement account should be your retirement account, not just a receptacle for Wall Street annuities and mutual funds. So with Battle Bank, your retirement account can own a duplex or a triplex. It can own a franchise. It can invest in gold or Bitcoin without the president say so, because it's your retirement account. And then finally, unlike other American banks, we believe that gold, silver, and platinum and palladium are good collateral. And you can access the capital that you have in your stack without having to sell your stack, which is our most popular lending product by far. There are periods of time, and you don't have to borrow against, you just have access to the money. Let's say that there's a distress asset that comes for sale. You'd like to buy it, but you don't want to sell your gold and silver to buy it. You can borrow against your gold and silver, buy the asset over time, if it's a real estate asset, finance out, repay the loan in effect to yourself. You follow me? Uh,
Yep. Yep.
uh, so we're having a really, really, really good time doing this. A really good
I'm
time.
I'm eagerly waiting for it to come to the UK because at the moment it's US only, isn't it?
US and Canadian. It took us about 2 years with the last bank
Right.
to access either the EU or the former Commonwealth. And we would expect within 24 months,
Okay.
subject to the vagaries of the English regulators, we would expect that we'll be able to serve Great Britain constituency within 24 months.
Okay. I will be eagerly awaiting. Rick, thank you very much for your time. I will be
Pleasure,
sure
sir.
to arrange another one in the future.
I look forward to that.